Welcome back to Nuclear News, where we're keeping tabs on a growth industry in the early stages of its mass adoption, uranium, the fuel that's going to power nuclear energy, which will be powering everything. The Sprott Junior Uranium Miners ETF over the last 12 months is up 14% and plummeting quickly. The S&P 500 up 18% and also plummeting. So why are uranium stocks plummeting? The exact same reason the S&P 500 is starting to plummet. The S&P 500's worst decline since 2022. NASDAQ 100 is in correction territory with AI darlings sinking. So what we're seeing is the market's starting to worry that earnings are coming in soft. The economy is super weak. Interest rates are still high. They're worrying about what investors in junior uranium stocks have been worried about for a long time. Capital's too expensive. Earnings are going to be weak. Growth is going to be constrained at this current pace. So the whole market is correcting. Uranium stocks are correcting worse than other assets, as we would expect in an early stage growth industry. So that's why uranium stocks are falling. Now, what's on the horizon, right? That's what really matters. What's next? If we're talking about short-term price action, well, obviously rates have to come down, right? Well, Powell says September rate cut is on the table if inflation data continues to cool. What's going to cause inflation to cool? Stocks falling. That's why every single time, the only thing that will trigger the Federal Reserve to lower interest rates is generally a stock market correction. That is what we're seeing heading into the election. The Fed talking about cutting rates, headline inflation coming down, stock market correcting, the whole market getting soft. And the longer the Federal Reserve keeps this going, the cheaper it's going to be for the United States to finance its debt at a low interest rate. What do uranium miners need? They need financing at a low interest rate, just like the US government. So everyone needs interest rates to come down. That's what we're waiting for. Once it happens, the same thing that happens every single other stock market correction is going to happen. Assets are going to rise. Rates will fall. In the meantime, let's stay on top of the fundamentals of this brand new industry. Uranium contract prices soar on uncertain supply, AI-led power demand. This is what we've been talking about in the show for a long time. The fundamentals are starting to trickle into the contracting cycle, right? How much are utilities paying for uranium? Doesn't matter what the stock market's going to do. They're going to pay what they have to pay. Term prices for uranium are now around $79 per pound of uranium, the highest since 2008, and estimated to rise further in coming months. What does that mean for these junior miners that are selling off so significantly? It means they're going to get paid significantly more. With the stronger market environment, we're currently locking in ceilings of about $125 to $130 per pound and floors at around $70 to $75 per pound in market-related contracts. The best prices seen in over a decade, said uranium miner Cameco, right? So we know uranium is in a multi-decade supply crunch. We know prices have to rise. We know utilities are going to have to pay a lot more. What does that mean? Again, these miners that are falling are going to get paid more and more and more. It really doesn't get bigger than that when you're looking at the opportunity in this space. Long-term uranium contract prices have hit over 16-year highs on supply uncertainty and higher demand from utilities scrambling to secure the scarce radioactive fuel to aggressively expand their capacity to power mushrooming AI data centers. That is a summary of what we've been talking about for the last year or so, at least, right? S&P 500 nuclear energy stocks storm higher as prices surge 800% on the largest U.S. power grid. The largest U.S. electrical grid operator announced prices jumped more than 800% at its annual market auction. The thesis is playing out. It's just getting through the centrally planned, manipulated macroeconomic environment. That's literally the only thing in our way. And we know everyone, including the US government, is incentivized to pump liquidity in the system, lower rates, and have assets spike. And obviously the backdrop to all of this, there you go. If elected, Donald Trump pledges to achieve a needed doubling of U.S. electricity production by building many more plants, citing nuclear as a key component of his energy expansion platform. And the current administration is already as we've covered, pumping billions of dollars into nuclear. So no matter who is elected, there's going to be a nuclear renaissance. That is the plan so far. Massive. This is from Cameco's just released this week, Q2 2024 conference call. Supply outlook is uncertain. In dark blue and light blue, we see the supply of uranium. And with these lines, we see the demand base case. So this is assuming there is no nuclear renaissance. This is assuming there is no exponential growth in uranium demand, which we know is not the case. We know there's an exponential. We know the demand for uranium is much higher than all these models. And so look at where we are in 2024. We're just getting started with what Cameco sees as a multi-decade supply crunch. And so with the already constrained supply, Kazatomprom announces new uranium tax rates. So Kazatomprom is the largest producer of uranium in the world. They're about to get an increase in tax expense on the uranium they produce. So who's going to feel this? Obviously, the people buying uranium. It's going to get more expensive, more scarce. Kazatomprom, the world's largest uranium producer, has announced changes to the mineral extraction tax rate affecting its mining entities in Kazakhstan starting from 2025. The MET rate for uranium will increase to 9% for 1 year before transitioning to a differentiated rate based on annual production volumes and uranium prices from 2026 onwards. So the cost to produce this valuable, important fuel is increasing even in the US. Navajo Nation plans to test the limit of tribal law, preventing transportation of uranium on its land. The Navajo Nation plans to test the limits of tribal law that ban the transportation of uranium ore on its land. So there's going to be a fight, right? If uranium ore can't be transferred on the Navajo Nation's land, then domestically produced uranium, which the United States is desperate for, is just going to spike even higher in cost. But before tribal police could catch up with 2 semi-trucks on federal highways, they learned the vehicles under contract with Energy Fuels no longer were on the reservation. So this is what Energy Fuels is currently fighting, right? France's EDF, Italian steelmakers, to consider joint nuclear energy investments. What are these two doing? The purpose of this is to make steel construction green. Right now, steel requires coal. And so they want to move from coal to uranium. This would revolutionize the met coal industry as more and more massive countries and entities start to adopt nuclear. Just another example of nuclear energy taking over the world. Spain's 1 gigawatt Trillo nuclear power plant gets 10-year license renewal. What does that look like in terms of the demand for uranium? Well, here's an example. NRC Gov saying we've renewed the operating licenses of Comanche Peak units 1 and 2 for an additional 20 years. So what does 20 more 1.2 gigawatt US nuclear reactor operating years add? It adds about 1.2 million pounds per year of additional Western demand. That's just from one plant, and that's for 20 years. So whenever you see a headline like this, understand the impact to already scarce uranium. Top nuclear regulator says Palisades could be running again by August 2025. That's a year from now. And so that is what's really going on. We have crashing stocks. We have deep value. We have stocks that are going to make a fortune on the uranium they have because utilities are going to have to continue paying more and more and more. In the meantime, we just have to get through this. JP Morgan predicts huge stock market crash. So it could be the opportunity of a lifetime to pick up deep value, high quality assets. It does not get better than this.